What's up, team? This is Ro, your best friend at JMSB. So here I was asked a question for COMM 217, Introduction to Financial Accounting. Let's have a look. On September 30th, 2013, the bank records indicated that CIC Inc. has $12,956.73 in its checking account. CIC was aware of 3 outstanding checks for a total of $2,112.19. During September 2013, the bank rejected 2 deposited checks from CIC's customers totaling $654.19 because of insufficient funds. The bank also charged CIC $12 in service fees. CIC had not yet received notice about the bad checks, but it had already recorded the service fees. Prior to any adjustments on September 30th, 2013, CIC's cash account would have a balance of. So this is a very typical bank reconciliation question. The idea behind this question is to simply derive the balance per books using the balance per bank. So we're going to sort of begin with that, with our cash balance per bank, which is $12,956.73. And now the idea is to derive the cash balance per books using the balance that is appearing on our statement. So for example, here the CIC was aware that there are 3 outstanding checks which are totaling this amount. Now this amount has not yet been taken out of this bank statement. So what we're going to do is we're going to deduct it. We're going to say less outstanding checks totaling 2112.19. We then see that the bank had rejected 2 checks, $654.19. Now the bank knows about this, but the firm doesn't. So according to the firm's books, this amount has not yet been minus. So we're going to add it back to the balance per bank. And then finally, we've got these fees of $12, but the firm has already recorded that. So there's no need to reconcile that amount. And if we simply net this value, this should tell you the balance per books. So I'm getting an answer of $11,498.73, so perhaps an answer of C. So a quick recap, what we've done here is we've started off with the cash balance per bank, and the idea is to derive the cash balance per book by beginning with that number. The reason we're minusing the outstanding checks is because the firm knows that they have written these checks, and so they've already minused this amount from their books, but it hasn't yet been deducted from the statement. The reason we're adding back the NSF checks is simply because the bank statement knows that you haven't collected this money, but according to the firm, they think that they've gotten this money, and we're trying to derive the value for the firm using the statement. And so if you net these values, you should be getting 11,498.73. So I'm hoping that this explanation helps, and if it does, you know what to do. Make sure you're tagging your friends that are taking the course. In the meantime, I hope you guys keep well, you study well. Row out.